Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, October 2nd, 2009. We start today's broadcast with the big news from today, the U.S. non-farm payroll report. The report showed that the U.S. job market deteriorated in September with 263,000 jobs shed, a pace that was faster than the one seen in August. The news disappointed expectations and shows that the recovery in the labor market may be slower and could change the expectations for the strength of the U.S. recovery. High unemployment will weigh on consumer sentiment and spending, and in September the unemployment rate rose to 9.8%, the worst level in 26 years. The data will mean that a rate increase from the Federal Reserve is now likely to be pushed further back, which could pressure the greenback. Right after the release, the euro-dollar pair fell below the 1.45 support level in a knee-jerk reaction, as the news would seem to increase risk aversion in the markets. The decline in the pair was rejected quickly though, and in a couple of hours after the release, the euro rallied to test 1.4648. The implication here could be that traders realize this will keep U.S. interest rates at their low rate for longer, which is dollar negative. Also, U.S. stocks, which opened lower as a result of the jobs report, rallied, with the Dow Jones Index recovering from its triple-digit dive to trade near its open by the end of today's trading. The dollar-yen pair fell in favor of the yen following the non-farm release, touching the 88.60 area before rallying to test its downward sloping line of resistance. That kept the pair within the range we have seen this week. In Japan, the unemployment rate surprised forecasts and dipped to 5.5%, easing off its record high. It's a welcome sign for the economy, but now analysts will see if this is just a dip for 1 month or something more continuous. A second report from Japan showed household spending up 2.6% in August compared to a year ago. A recovering labor market and increased consumer spending would be key ingredients to a Japanese recovery. The euro-yen pair pushed to about a 3-month low overnight following the non-farm release, but like against the dollar, the euro rallied from that low. It was unable to reach the highs seen yesterday at resistance near 131.60. So despite a rally in today's trading, it does not necessarily mean it's the start of a new upswing. The Aussie-US dollar pair slid for a second straight session as yesterday's sharp sell-off in equities hurt risk appetite and carry trade. The pair found support at the lower boundary of the pair's recent sideways trading range. The Aussie, like other risk-sensitive currencies, staged a counter-rally afterwards. It remains to be seen what happens next week, but on Monday evening, the Reserve Bank of Australia will decide on interest rates, and if Governor Glenn Stevens is hawkish, it could support the Aussie next week. In the UK, the nationwide house price index rose 0.9%, continuing the recent upward momentum. That put the price of a typical UK property to the same level from a year ago, representing the first time since March 2008 that the year-on-year rate has not been negative. Following a disappointing manufacturing PMI release earlier in the week from the UK, today's construction PMI also came in below expectations, declining to 46.7. That continued the contraction in the sector into a 19th straight month. Employment in the sector deteriorated for a 16th straight month. The pound-dollar pair broke below a short-term level of support today, falling to 1.58, but then recovered to test a downward sloping line of resistance. Though the pair will likely end the day where it started, the upward momentum from the beginning of the week has been undone. Next week will tell if support near 1.58 will hold or if the pound extends its losses. Next week will feature services sector data from the UK and US early in the week and retail sales figures from the Eurozone. There will also be 3 interest rate decisions from Australia, the Eurozone, and the UK. And that will wrap up our coverage of the Forex market for this week. Thank you very much for joining us here at CMSFX.com, and from all of us here at CMS Forex, have a great weekend.